The long-term price outlook for Bitcoin by 2030-2050 remains highly uncertain and speculative, shaped by macroeconomic forces, institutional adoption, regulation, and technological risks. Analysts and third-party forecasts differ widely, with some bullish models projecting multi-hundred-thousand to multi-million-dollar price levels by 2030, driven by Bitcoin's fixed supply, increasing scarcity after halving cycles, and growing mainstream use and ETF flows. Others stress risk factors that could restrain or reverse price gains, emphasizing that past performance is not a reliable predictor of future price. Market drivers and current scenario. Bitcoin's role as a store of value has strengthened with institutional demand and spot BTC ETFs. On the geopolitical front, the United States has taken steps such as the establishment of a strategic Bitcoin reserve under an executive order in 2025 intended to hold government-owned BTC and signal national acceptance of digital assets as a reserve component. This policy move aims to enhance legitimacy and demonstrate U.S. commitment to crypto infrastructure. Analysts warn that large, unannounced movements of these coins might exert downward pressure during thin trading periods, although a transfer into long-term cold storage, e.g., under U.S. strategic control, could support long-term price stability. Satoshi Nakamoto's wallet risk. One major speculative risk in Bitcoin's narrative involves the mysterious creator Satoshi Nakamoto, believed to control over 1 million BTC, roughly 100 billion PAS in value. Nakamoto's identity remains unknown and his coins have been dormant for years. If those wallets were ever accessed, hacked, or actively traded, it could flood markets with vast supply, shake investor confidence, and trigger panic selling, even if prices rebounded later. The potential threat of quantum computing breaking cryptography has also been discussed by experts as a distant but significant long-term risk if safeguards are not adopted. Risks and what could derail growth. Despite long-term optimism, Bitcoin faces multiple risks: regulatory crackdowns, adverse legislation in major markets, competitive blockchain networks, technological vulnerabilities, and macroeconomic shocks could depress demand or push prices lower. Furthermore, large holders or geopolitical actors releasing BTC could introduce unexpected supply. Overall, while many analysts remain bullish about Bitcoin's long-term path toward multi-hundred-thousand-plus valuations by 2030 and significant growth beyond 2040, these targets are subject to major uncertainties, geopolitical developments, and systemic risk factors that investors must closely monitor.